The first half of 2025 saw significant stock market volatility due to tariff and inflation concerns. As economic uncertainty persists, how should investors prepare for the remainder of the year? On this, IBD Explains, we review 2025's market action and where experts believe stocks are headed next. Here with me to break things down is IBD Deputy Markets Editor David Saito-Chung, who recently analyzed the mid-year market forecast. So, David, let's start off by just talking about how you would characterize the market action in the first half of the year.
Very interesting 6 months, right, Lexi? We decided to use a bouncing tennis ball as the image to sort of give a visual take on what happened. As many people know, we actually had a bear market decline by April. Both S&P 500 and NASDAQ fell as much as 20 to 22%, even a little bit more than that off their 52-week highs, and that met the general technical definition. On the other hand, despite all the headlines that have really shook up investors, the market has come back really strong, and so therefore, we're not down too far off the all-time highs, 20,204 for the Nasdaq, and now currently maybe 2% or 3% off the highs for the S&P. It's an impressive comeback, and I would say that the market continues to be resilient after two very strong years in 2023 and 2024.
Well, Dave, I like the image of the tennis ball because I feel like investors have maybe felt like they've been going back and forth a little bit. But you mentioned the word headlines, and I want to ask you, like, what have been the biggest influences on the market so far this year?
Without question, you gotta really point to the tariffs. President Trump, trying to really shake up the global trading system, and so far he's done an incredible job at that. And has put a lot of effort, and his team in the White House have backed him up totally on trying to create a level playing field. That kind of uncertainty, however, has certainly reverberated in the stock market because people worried about to what degree tariffs at the current and future rates would impact the economy. So the story that I wrote that published notes some really fine insight from Matt Stuckey over at Northwestern Mutual Wealth Management, and they calculated that it would certainly take a small bite out of the United U.S. GDP this year, and if the tariffs were to actually get closer to what the reciprocal tariffs that President Trump announced on April 2nd, they would take an even bigger bite. Of course, some sectors might take a bigger hit than others, but at the same time, we can see that this current administration is also pro-business. Take a look at, for instance, U.S. Steel getting the go-ahead to merge with Nippon Steel, Japan. And we're also seeing a lot of strength, for instance, in Bitcoin. It's interesting how Bitcoin's had a great year, doing better than stocks, partly because the Treasury Department, Scott Bessent, has said he thinks that the future for stablecoin, with T-bills backing it, is looking like it has a strong outlook for the future. So a lot of interesting things going on there. Ultimately, though, too, we also have to watch what the Fed does. We got the Fed meeting coming up. Not expected to do anything major, but still the market seems to be holding out for possibly two rate cuts after a big jump in interest rates in 2022, and then tapering them a little bit last year. But you know what, Lexi, this has been an amazing year. The headlines have been so fluid, and we can see that in the recent developments in the energy markets following the heightened conflict in the Middle East, and therefore it's really important to pay attention to the sudden rotations in and out of various sectors. For a while, for sure, oil had been in the doghouse. We had double-digit declines, not only in the futures market, but in a lot of related stocks, but they've come back strong, and we'll see whether that that the strength continues and whether that can create some new leadership opportunities.
Yeah, and you mentioned a couple areas that seem to be performing well, like Bitcoin. So, what sectors have you identified that have been the best performers so far this year?
Unfortunately, my story was so long, Lexi, that we had to chop off one of the most important themes, I think, for 2025 beyond Bitcoin. And it is really AI, and artificial intelligence is really going to, if not already, change the way we live, work, and play. That's an Bill O'Neill, the founder of IBD, sort of a mantra about where, as investors, to be looking for those companies that are really going to change society, change the business, change the way we work. And so we've seen a lot of chip and networking, internet related software, and data center stocks do quite well this year. And many of them had big runs the prior years. So even though energy has been a laggard, if you look more closely, you see companies like EQT, a natural gas producer. You see GE Vernova, the spinoff from that old blue chip General Electric, way outperforming the market, having good positive gains for the year. And part of that is strong fundamentals and execution. And part of that is also related to the future growth and demand.
Now, I find that interesting, Dave, because it seemed like there were a lot of concerns about AI spending coming into the year and maybe seeing some slowdown in some of these earnings reports. We also had the DeepSeek news at the beginning of the year that rattled these stocks.
Mhm.
So, what's your assessment of where we are now with AI? I mean, it seemed like, again, the key word here is resilience.
Yes, it's resilience. It's young in terms of an industry, although for sure, like data call centers have used AI, like when you call and you hear this menu options and a natural sounding voice helping you. That's one form of AI. Right now, Jensen Huang, CEO of NVIDIA, is really saying now that based on the latest conference call, that inference, which is basically established AI models taking in new information and making judgments and decisions based on all the information has been trained on, is going to be the next step. Is something that's a little bit hard to really fathom and understand because he is saying that for once a lot of industries are going to be using that kind of AI. Every factory out there, in his opinion, is going to have its own AI factory backing it up to make sure it's running properly. You've got countries like Saudi Arabia, not just the US and China, but all over the world investing heavily in AI so that they keep their own intellectual property and maintain some kind of economic edge. And so the possibilities seem very, very strong. Look at open AI too, right? Isn't ChatGPT becoming more popular and used by a wide swath of people? And you've got all these other competitors working with them too. Latest valuation of OpenAI is like jaw dropping, and that's not a publicly traded company yet. Full disclosure, I do own NVIDIA shares, but I see the leadership in companies like NVIDIA and in Broadcom, as well as some of the top software companies that are utilizing AI to spur more growth. So it's just like many experts out there would tell you that it's still early innings, still from a stock market point of view, still seems to be the case. That said, always make sure that, as an investor, you're aware of the risks that, no stock is infallible. Corrections will happen in the future. Stocks will make these tops as sentiment gets very, very frothy, and you have to use charts to make sure your timing is good in these companies.
And we talked about some sectors, and you mentioned a couple of stocks, but any other individual names out there that have really been standouts so far this year?
Well, we are seeing some nice action in some consumer discretionary names. For instance, on Leaderboard, there's been companies such as Brinker International, their Chili's chain of casual dining restaurants seems to be growing market share. They They seem to be competing very almost head on with McDonald's, for instance, because of food inflation and wage inflation. Uh, the the Brinker International company has found a way to expand its audience. They use social media very well. That's a new position on Leaderboard, which tries to create a model portfolio of IBD style growth stocks. Another area is aerospace for sure, Lexi. As an example, one of the so-called full-size positions on the Leaderboard model portfolio is a company that goes by the ticker CRS, and that company, Carpenter Technology, has been a true leader in specialty alloys for not only aerospace but medical technologies and building, and their fundamentals have remained very strong. It seems like aviation, space travel, air travel is still recovering and growing after the COVID pandemic, and so we've kept that on the leaderboard for quite a while. But here again, I'd like to highlight that AI is really continuing to be an impressive area, even though there's a lot of mixed performance among big cap tech. It's funny, Lexi, that the FNGS ETF, which covers, I think, the top 10 largest tech companies, so it's beyond Mag 7, is up 8% year to date. That's really impressive. But when you look at the Mag 7 themselves, it's a motley performance. You've got Apple down 21% year to date, and Alphabet, which is Google, Googl, down 6%, Amazon down 4%, but Microsoft up 13%, and the best Mag 7 stock, Meta Platforms, up 20%. Another area I would be careful about would be like home building and related. The related ETFs like XHB down 8%, even though the S&P and the Nasdaq are up a smidge. And so there is some lopsidedness to the current market. And so it's very important to be really paying attention to strong sector action, strong industry group action, and hopefully find the real leaders in those industries.
Now, you mentioned home builders, Dave, but are there any other sectors or industry groups right now that would be in the doghouse, so to speak?
Well, that's a good question. I'm what I'm seeing is, as an example, we've had a big rebound in crude oil, and therefore crude oil is now close to almost break even, and still well off its all-time highs. But there, here again, if you're in natural gas and clean energy, like for instance, GE Vernova, which is making these huge gas turbines, you're probably doing very well with those kind of stocks. The Van Eck Oil Services ETF, that's a popular ETF. OIH is a ticker. That's down almost 10%. The Energy Select Sector Spiders, XLE, which has a huge amount of it in the big integrated majors like Chevron and Exxon and whatnot, that's up 2%. So you're really, like in energy, you're not really getting a whole lot of outperformance if you are only focused on ETFs, and therefore that makes a market like this one a little more challenging if you really want to outperform the large cap benchmarks.
And Dave, when we look to the rest of 2025, what's the anticipated action there for stocks?
Well, in our story that we just published, Ed Yardini made a bold forecast thinking that so long as the earnings trajectory looks good and there's no sudden change in the risk of a recession in the U.S., and the possibility of a big spike in long-term interest rates, if that stays low, then he is targeting 6,500 on the S&P, which would be a 7-8% gain from here, excluding dividends. So that is a rosy forecast. Maybe not necessarily the most bullish, but certainly not the most bearish. And that's on top of 20% plus gains in the S&P. So in 2023 we were up 24%, and in 2024 we were up 23%. So please keep in mind too, I think that's one risk for all investors, just knowing that the valuations are on the lofty side. History has shown that we are always always at risk of a correction in the market because they happen so often, and that's partly because expectations are high. When you've got 20% plus compounded annual growth in the large cap stocks, that makes it a little more vulnerable to a pullback. But we'll see. I think the economy is holding up firm, defying a lot of people's expectations, and therefore large cap companies tend to do a little bit better because they have, the bigger resources and the bigger earnings and sales power.
Now, are there any other indicators out there that are jumping out to you that maybe support the case, this bull case for the market to close out the year?
Yeah, that's great. Great question. In the story that I wrote, we plotted the SIBO volatility index. That's a zero VIX if you use investors.com or market search charts. And this recent spike to just over 60 in April was one of the largest in the last 8 years. And these spikes in volatility indicate fear among index options traders. And such spikes in fear don't happen that often. Therefore, we pay really close attention to whether there are signs in the primary market indicators, that is the S&P, the NASDAQ, leading stocks, whether they've shown signs of bottoming or breaking out. And that's what we've seen since April. We had a follow-through day on April 22nd, and the Nasdaq and the S&P followed through on initial up days after their bear market style declines, and so far we are still in that positive uptrend. The current outlook calls for 80% to 100% exposure, and so that's a positive right now. But the stock market is so complex and involves so many different factors. It's very important just keep an eye on what these indexes are doing, keep a close eye on your stocks, and always be flexible in your perspective.
So, on that note, then, Dave, what's your takeaway then for investors as the rest of the market action unfolds into 2025?
Well, personally, I love to pick individual stocks, and I like to look for powerful, strong, innovative, newer growth companies that have the potential to beat the markets. But also, I really hope everyone who likes to find the kind of stocks that we like to find to stay disciplined and not chase stocks beyond proper buy points. Maybe look toward pullbacks in stocks that tend to be more volatile. We like to use the 10-week moving average. On a weekly chart, we like to look at areas on the chart where there was prior upside resistance and it becomes an area of support, in terms of an area where if the stock comes down, buyers come back in. Those are the kind of areas I think individual investors would benefit from focusing on. And also try not to pick the bottom in the laggard areas of the market. Just focus on strength and growth, and keep your mind open toward the possibilities that some of these stocks are going to go on some amazing multi-year runs.
Well, Dave, thanks so much for your insights today. We really appreciate it.
Oh, my pleasure. Great to be with you, Lexi.